Hello, everyone, and welcome back, or maybe welcome, because this is a new show. This is the morning market open new show, whatever we will call it later. We went from lunchtime hour to now morning breakfast
To
time.
breakfast time, yeah. What's going on, Neil? And good morning to everybody watching.
Good morning, good afternoon, good whatever. This is episode 27, I think. We were on a roll previously until episode 24, I think, and then I went on vacation, you went on vacation, I came back, your
And I
kids
just
started
never
to
came
grow
back.
up.
Yeah. My kids started to grow up a little bit too quickly.
Yeah, but at least the market has gone up.
Yeah. Yeah, I mean, we kind of missed. I wonder when we start. When was the last time we did it? And what was the stock price? I wonder if it's flat or what compared to when we last. No, we were doing the therapy sessions. I think right.
Yeah.
So the therapy sessions. So maybe the stock market was down. We let it cool off, and now we're back for some excitement. Hopefully.
Yeah, I mean, April 1st, 3rd, and 8th, we went live. And then I was on vacation, so we came back for the Tesla earnings, but that was another show. And then April 28th, we also came back. So I guess we were there during the difficult times, and then we came back when the markets were going up already.
Yeah.
So
We were there when the world needed us the most.
exactly. Hopefully, now that we're back, the market doesn't go down because that
Yeah,
happened previously.
yeah, that's always fun. Usually when we end up doing, when I end up doing like some type of like portfolio video or some type of like super hype video that everything's going amazing, it's usually the top. So hopefully this isn't the top right now.
Yeah, I mean, I hope so. But I mean, since we talked, a lot of things have happened. Of course, earnings season. Computex is going on right now. I believe AMD is talking today or tomorrow. Tonight.
Yeah, I think it's tonight around 11 o'clock at night.
Yeah, we already had Nvidia. You made already two videos for those that missed that. SMCI talk. I don't know if you had the chance to listen or watch that presentation, but if you want to have a laugh, you have to watch it. It's
Wait, which one?
incredible. SMCI.
I don't know, man. You know, every time I'm watching this guy, the CEO, it's very cringy to me. I always feel like he makes every presentation as a. I don't know if he did it for this one, but normally he makes every presentation like an extreme used car salesman. Like he's just trying to sell you and sell you and sell you. And it's like I don't know. I feel like there's other ways to convey the same information without sounding so salesy.
He invited Jensen on the stage. Incredible. Incredible. Jensen laughed. The other guy didn't understand half of the jokes. The audience laughed. It was awkward, but quite funny. Like, yeah, at one point, Jensen said, because they were talking about the new DLC 2, so direct liquid cooling 2, and he was like, "Wow, cool name," because they only added the 2 afterwards. And then it's like Jensen is like, "Yeah, Charles is 85% engineer and 15% plumber."
Man, now I gotta watch it. I mean, we've also had some other. Today we have Google I/O event too. That's also going to be.
Hmm.
I think Google's keynote is going to start in about 5 hours or so. I'm curious to see what we hear from Google I/O. Microsoft just had their Microsoft build. I don't think we really heard anything crazy out of Microsoft. I saw there were some CEOs that did talk with Microsoft CEO. We saw kind of Elon Musk. We saw Sam Altman. We saw Jensen Huang. Um, but I don't think there was anything that really got the market excited. I wonder what Google might announce today. I'm pretty excited there.
Yeah, I agree. I think they will be announcing quite a lot of new features for Gemini for sure, um, because they have momentum in the business and in the AI space. No momentum in the stock just yet, but I don't know. Maybe they even announced some Google Glass features, because we've had a couple of hints here and there about that. Um, AI agents would be cool, but yeah, I expect it to be actually a big event, um, and it might actually finally move the stock.
I mean, Google is probably one of my favorites right now in forms of valuation and growth opportunity. Obviously, it seems like the world is over for Google, but that is one that I think is super exciting for long term momentum. So Sorg, I don't know what they're gonna. They have a few. Gorg, let me just pull it up. I forgot we do this. Gorg, what Google will announce? I don't know exactly. Usually, they're gonna announce maybe some updates to like their Gemini models, some cool updates to maybe their TPU. They might not announce some cool solutions to their cloud market. So it's just going to be an overall landscape of Google's product. It's kind of like their GTC. I think if you follow Nvidia, you know GTC. This is kind of like their GTC version. So it's things to be excited, but sometimes I do worry if this is one of those events again that's like sell the event type news, where after the event happens, maybe the stock might move down a little bit due to maybe a little bit too much excitement coming in. But overall, long term, super bullish for Google for sure.
Yeah, I agree. I mean, I do think it's more of a, yeah, maybe developer slash product type of event, and hopefully they got the message from the last events where it wasn't that exciting and all of that. But since the start of 2025, they've done very well. If we look at the betting markets, right, who will have the best leading model? I think at the end of May or June, Gemini 2.5 Pro is leading the way by a wide margin. So definitely they're doing something right. Some of the people in the stock market still think that they're going to die off, but the data suggests otherwise. So yeah, it's going to be interesting. Yeah, Nebius just had their earnings. I'm actually, well, my video will go live pretty soon. Um, you you of course have the other Nebius. Well, not the same Nebius, but Coreweave, which has done
Uh,
extremely well actually.
yeah, I mean, definitely not one I bought during the IPO Neo, but it's one that when we had that market downturn, I finally caved in, and did a portfolio video, and that was during the time where I was changing a lot in my over not changing a lot, but it was the time where I was adding a lot to my overall portfolio, so there were massive changes happening, and I wanted to increase my overall exposure to Nvidia without really buying more Nvidia because it was already so big. So I did believe the AI market was pretty cheap. So I ended up buying a lot of ways to kind of get exposure to the AI space. CoreWeave was one of the more direct plays. Then I did more indirect plays via some ETFs as well. But it seemed to have paid off really, really well. I mean, stock, I don't know where it's at right now. I'm not even gonna look, but last time I checked, it was up 100% from like the cost basis. But things like that scare me a lot. It makes me want to like, hey, maybe I should take some little bit of gains here and there, because 100% in a few weeks is not definitely not normal.
Yeah, I mean, I remember when it went public, we talked about that. The IPO got a lot of attention, but then the stock didn't really move much, actually went down. And now, well, it went up quite a lot. You did a video reviewing their earnings report, right? And after the earnings report, the stock actually went down. And then I think a day or two later, it jumped 22%. I think it was because of that OpenAI partnership deal that happened, and maybe also a mix of the NVIDIA 13F filing, although we already knew that this was going to happen. But why do you think the market took a day or two to digest and actually push this stock back up?
Yeah, I mean, I think you brought it up. We did know that Nvidia had purchased shares of this, but I think at the IPO, we were only hearing reports of them buying like about $300 million worth of stock, or the anchored at that price. Then when we saw the IPO, the actual 13F, obviously the stock price has gone up, but it showed that they kind of maybe had a more initial bigger purchase, because I think at the moment of the 13F it was closer to $1 billion in actual value. So that was definitely one thing, Neil. I want to say the second thing is, since it showcases that the market really runs on data, in my opinion, Neil. And for the first 24 hours or so, there were no earnings transcript in any platform about Coreweave, and I think that's what really kind of created maybe not much of growth opportunity later on, because during the earnings call they did talk about that OpenAI $4 billion thing, and they talked about some other contracts that they even had another hyperscaler that still hasn't been named, that is going to enter. It's outside of the Microsoft and overall players, so it seems like there is another hyperscaler, but because there was no live earnings transcript, I don't believe all the systems out there that were able to pick up maybe some of the good news were really catching what was happening with CoreWeave, until we started to see maybe more meetings with the CEO and interviews with the CEO. And obviously, I do believe there's also maybe a little bit too much hype right now with CoreWeave. So a lot of bullish tailwinds, but also a lot of hype tailwind as well. So overall, though, I definitely see why the market is excited right now. And we also kind of got that UAE event as well, and maybe all that tailwinds are creating kind of that sentiment for a lot of these AI stocks.
Yeah, there's definitely, I mean, especially in the last, I'd say, 10 days or so, we've had plenty of announcements around AI stocks, AI investments. Again, announcements are one thing, actually investing and paying is another thing, right? We've heard hundreds of billions of dollars in investment, trillions of dollars in investment. We will have to wait and see until those announcements actually become real financial moves, let's say, or has a financial impact on one of those companies. But yeah, certainly there is a lot of momentum. There still is a lot of demand. Um, and yeah, maybe we can talk a little bit more about Computex in a bit.
Yeah, and if I can, just 2 points of CoreWeave that I think maybe investors should be familiar with. The first thing is, I do believe, did I say Computex? I meant CoreWeave. That investors should be familiar with. First is, they did have a massive capital expenditure guidance for this fiscal year, Neil. It's about $20 billion for the full year, and they're only spending about $5 billion in the first half, in the first 2 quarters. They're expecting to spend the other 15 billion in the second half. I think this opens up a new opportunity for Nvidia stock investors to see that it's no longer just the cloud server providers that are buying massive AI GPUs. You have companies like CoreWeave. You're going to have companies like Nebius. I don't know if Nebius kind of shared their capex, a little bit smaller than that, so I wouldn't expect that same type of level of capex, but it's still a great indication that it's no longer, when looking at capital expenditure, you're no longer just looking at your Amazon. You're no longer just looking at your Google or your Meta or whatever. You're looking at these other players, because these are also going to be buying a lot and a lot of AI chips. That was the first thing. The second thing I wanted to say is, company grew 420% year-over-year growth. I don't expect triple-digit growth to continue like that, especially in those levels. But I do believe this is going to be like a nice. There's going to be fluctuations. Some quarters are going to be strong. But I do believe at least strong, high double-digit growth for at least a year or so as we continue to see this development of the AI market.
Yeah, I mean they have momentum. Of course, the big jumps year over year. Same with Nebius, right? They grew ARR 684%. Okay, very impressive, but that number was very small previously, so it makes sense. I'm not expecting another 600 12 months from now, but yeah, these companies, especially if you got them at the right price, you got them early, and the way up is going to be, I guess, longer than just a couple of quarters. So, and we got here Tyler saying $2 billion capex guided from Nebius.
And I mean that's insane. I mean, $2 billion in just AI infrastructure. This is kind of another kind of player here. There's so many like Nebius as well. So if you keep adding a 2 billion here, and all the different kind of AI products, you can definitely see that the AI market is just no longer by the big three or the big four. I think even I was looking. I think I talked to you about it, Neil. Is Coreweave's capex is bigger than Oracle's, I believe, for last year. And Oracle last year had like 14 billion. So this company is doing 2023 billion this year. Showcases that this AI capex war is getting pretty intense.
Yeah, and I mean, it's mind blowing that these things are still happening even today, right? You would think that in the last 2 years or so, with the hundreds of billions of dollars in commitments, in build out, you would be towards the end of it, but clearly not, right? When you have smaller players like Nebius, like Coreweave spending billions of dollars already right now, still, well, there still is a long way to go.
And I think this is Jensen with Microsoft CEO yesterday said it really well, where Jensen talks to these CEOs and tell them not to buy everything at Bright, to buy in portions, to buy some chips in the first year, some chips in the second year, some chips in the third year, because if you just buy one in year one and you spend all your money, you're gonna be super angry. But if you he mentioned dollar cost average or technology cost average is what he meant, where like you increase your technology of your fleet on a yearly basis, your average compute power is gonna go up with the amount of money that you spend, and that's the curve he wants to see with his customers. And I think having more competitors in this space, in this capital expenditure, is gonna make sure that that also continues. That not one player is going to create a massive over inventory on themselves. So so it's going to help kind of create this great opportunity for Nvidia and all these AI players to continue to sell their next generations of chips.
I mean, before we touch on and continue on the Nvidia side of things, AMD, if Ariel Alberto is listening, you owe us a membership, because AMD did hit $120 last week, which means that I won the bet. I mean, it actually happened way earlier than I expected, but fine, I'll take whatever I can. So congratulations, Jose and myself. We got a new member of the channel. If anybody wants to have a new bet with me, just write them down. But yeah, AMD, $6 billion in buybacks announced last week, totaling now $10 billion, which has been well received, I guess, by the market. But now, NVIDIA during Computex announced NVLink Fusion. You talked about that on your channel. And when you saw the names of the partners on that list, there was no Broadcom, right? You had MediaTek, Fujitsu, Qualcomm, you name it, no Broadcom. Very interesting, I'd say. Second of all, I think Qualcomm already announced that they're working on a chip that could be integrated, which is good for them because that's suddenly a new area that they can grow. Are we expecting to see an Intel and AMD one, do you think?
You know, first let's jump into the Broadcom. There are a lot of things came into my mind. Obviously, the first initial reaction from India from this was very bullish for the stock, and I still believe it's bullish. But I think my bullish kind of came later with more questions of and one of those questions is why did Broadcom not show up, and what about these other players? So for Broadcom, I think Broadcom believes that they have a better competitive solution to this. And let's say Broadcom is in a weird place in ASIC solution. A lot of these kind of ASIC players are in a weird place where they're both a middleman and a developer. And let's say you're a Microsoft, and I go to Broadcom and I say, hey, look, help me develop these chips. A chip is not just one thing, right, Neil? It's like multiple building blocks. So Microsoft can come in and say, hey, look, I have 7 out of the 10 building blocks. You can help me with the other 3 out of the 10 building blocks. And I'm going to pay you a royalty fee. I'm going to pay you some form of engineering design upfront as well for those 3 out of 10 blocks. So then Broadcom is able to kind of pay that out, especially if they're the ones providing the IP. And Broadcom has a lot of IP that they do that. Now, if you kind of add NVIDIA into the mix, Microsoft might go say, hey, Broadcom, I'll come to you. I have 7 out of the 10. You help me with 3 out of the 10, but one of those 10s, I want you to use NVIDIA's IP. Now Broadcom gets a little bit less of the pie because now NVIDIA is going to get more of that legacy or licensing fee from that part. I think Broadcom doesn't want to share that revenue piece. And the reason it says I don't want to do it is because it's confident that its overall IP and systems that it has is enough to compete against NVIDIA. Marvell and those other players that we saw in the Neo on the list, we can just tell from revenue numbers and how big they are that they are not number one in ASIC. Broadcom is number one. These other players, they would rather get more customers and share revenue than have no customers at all. So I think that's why we ended up not seeing Broadcom on the list. Now the question is, who's going to compete better? Who's going to have the better parts? Is it going to be NVIDIA's partners, or is it going to be Broadcom in itself, right? So I think that's why Broadcom wasn't on the list. The second question is, will these massive ASIC players end up leaving, end up using NVIDIA's ecosystem? The reason that's a question is because why are they building these ASIC solutions? Are they trying to escape NVIDIA's ecosystem, or are they doing it more for reduction of price? If it's them trying to escape NVIDIA's ecosystem, the answer is most likely no. They're not going to go with NVIDIA's link, because why would you go back? Now, if the real answer is it's mainly because of a pricing issue, and it's obviously much cheaper, we don't know the cost structure of this. But if it's similar to just building another ASIC solution and you're just paying an extra licensing fee to another player, I think customers would switch off. So I think there is, depending on the pricing, if there's not an extreme NVIDIA tax on it, I think there is a potential for massive customers. Now with Qualcomm and Fujitsu, I think it does open up the opportunity for NVIDIA to now use Qualcomm and Fujitsu as also a selling partner, right? And those companies have a lot of great partnerships with other companies, and they say, and they might just want to use Qualcomm's product, but Qualcomm doesn't have an AI chip. Now they kind of do. So it opens up a brand new opportunity for Qualcomm, for Fujitsu, and it makes, in theory, it just creates kind of like a sales pitch for NVIDIA solutions without NVIDIA really having to sell. Then there was one final question you asked, and I completely forgot about it. If maybe I missed something.
Intel and AMD.
Yeah, so I don't know. I don't think AMD would do it. AMD, I think, is very sold on their MI300 platform. Intel, maybe, Neo, because I think Li Butan is really focused on creating an AI ecosystem, and this could be in the direction to get in it ahead of time, like to speed up the process. I think if Intel does join, it would be more of like a way to get into the market quickly, and then eventually kind of do that Apple move where they would kind of start to devolve themselves from it, where it's like, oh, you know what, I can actually do this part myself. I can actually do this part myself. I can actually do this part myself. So if Intel does go into it, I think it would be more just to get into the market right away, but then we would kind of see an exit plan from it. I don't think they want to be exposed to NVIDIA for too long.
Yeah, I mean, the message, or yeah, I'd say the message that I got from it is it's one way for NVIDIA to open up the sales ecosystem, I'd say, but make sure that at the end of the day, more people are inside of the NVIDIA ecosystem, right? And maybe that's, I agree with your point with AMD. I think AMD will try to heavily compete with NVIDIA, especially back half of this year, starting 2026, or maybe not starting 26, but in 26 with the MI400. But Intel might actually use this opportunity to maybe compete more with AMD. Right? There will be like, you know what? Okay, there is now an opportunity for us to still include our own product while using NVIDIA, which we know is much better than what we have. And that's how we get back on track. And I guess that's what's going to happen with Qualcomm as well, because Qualcomm can now enter the game with their own plus using NVIDIA. So it is a very good strategic move. NVIDIA saying, you know what, actually, okay, there are more competitors today. We know we might not have the huge lead that we had 2 years ago. We still have the lead, but you know what? Let's let the others play, but let's make sure that they stick around in our ecosystem, which at the end of the day is the most important part. Because the more people inside the ecosystem, the less incentive you're going to have to use something else at the end of the day.
Yeah, I agree. I mean, I think it's pretty exciting. It is. I'm gonna actually have some questions that I'm gonna try to email NVIDIA's IR. Because there's certain things that I don't understand, like how customizable is it? Like obviously NVIDIA
Mhm.
provides in the slide they show it's like you can only like switch off the CPU or the GPU, but can you how much can you switch off? There's a lot of other parts in it like a DPU or networking switches. Like if it's extremely customizable, I would get more bullish on it because it does push more customers to feel, hey, look, I don't feel that pressure from Nvidia to be in the bottom to be breathing down my neck. So I want to get questions like that, and also I hope during a Q&A session, I don't know if they'll be able to answer it, but like let's say I have a TPU, I obviously if I or some form of ASIC, how is it if I already have something built? And the other thing, Neil, is they're not just trying to build a chip, they're trying to build the infrastructure stack. This is where the difference is happening, right? It's not like you have to build the TPU, you have everything you want to build these massive infrastructures. If I have a TPU already, how much more changes do I need to make before I plug it in? Like, how long is that research and design time and validation time? Because obviously, whenever you're connecting anything with anything, Neil, you have to make sure the connections are good. You need to validate it. You need to simulate it, and that takes a few months, maybe a few quarters. I would love to hear from them. What are their thoughts on what the time lapse is? Because usually for an ASIC, it's about a year, maybe 2 years, depending on your cadence, maybe 3 years. I wonder if something like this is maybe Broadcom still develops the TPUs, but then to kind of create this massive AI infrastructure, you now partner up with NVIDIA to do that. I want to hear more about their time lapse, and I'll see if they respond to little old me on some of those questions I have. But if so, I think it would be a lot more information for investors.
Yeah, I'm actually surprised they never invite you to a GTC event or something like that. Very disrespectful, I'd say.
Extremely, extremely, extremely. But I think next year, Neil, I'm starting to do a lot more conferences next year. And I'm gonna start cold emailing a lot more companies to see, yo, you want me in there to make sure I can cover your company perfectly.
I mean, why not? Why not? Waldo has an interesting question here. Jensen spoke again. Does Couch have another Nvidia share? Well, we didn't live stream it, so I didn't buy an extra share. But maybe I should, because I did say that every time that we do a live stream on Nvidia's conference, I'd buy a share. But we didn't live stream that, so
Yeah.
maybe
And
it's not a rule.
I got a question here, Neo. Jose, should we expect Nvidia's earnings next week to be revenue minus the China write-off of $5 billion? So, Scott, a few things first. I do believe the I got to look back. I think it's important to remember when the law went into effect and when it related to Nvidia's earnings. And it didn't go for the whole earnings. I know for sure it didn't go for the whole earnings. I didn't know exactly when it is. So you're not going to see the a massive revenue destruction in this quarter. You are going to see a write-off on their earnings per share, though. So they're most likely going to show, you're going to see GAAP earnings per share are going to be down dramatically, maybe compared to a year ago. Non-GAAP earnings per share, though, I'm pretty sure they're going to share that number without the actual write-off. Maybe that might be a more important to see how the company is actually doing. Now, someone mentioned it here. Nathan actually mentioned it, that the revenue here is actually more than $5 billion. This is what they're writing off. So they're writing off inventory at $5 billion. But as a business, Nathan breaks it down here pretty quick. Great is you sell your inventory at a higher price, right? Right, Neil. So they have about a 70% margin on average. On the 70% margin on $5 billion of inventory is actually about 15 to $17 billion. That's typically what Nvidia expected to be kind of maybe the revenue that they would have made from these chips over the next few quarters. This is inventory they had for the next few quarters. So AMD, I think, broke it down really well, where they had a $800 million loss, but the revenue hit was 1.7 billion, and I think they took 800 million in the first quarter, in this upcoming quarter, second quarter, and I think 700 million in the third quarter after that. So I'm pretty sure Nvidia is going to give us similar thought process. But I do want to say, Scott, before I end this thought, is we did just get the UAE announcement, and we're most likely going to want to listen. Is this enough to offset any loss from the Chinese space? Based on the investments we're seeing, Niels, these billions being thrown everywhere, it seems like it could be. But I think that's going to be a question during the earnings call. So not to worry about the China write-off, but it's definitely going to make the GAAP earnings per share look a little wonky for this quarter.
Yeah, plus as much information as we can get on the future potential negative impact or positive impact, I think that's where the market will focus its energy on. Not just a one quarter, whether or not the timing was right or not remains to be seen. Quick look at the markets. I think the market did open, and since we are a market open show right now, we missed the open. We missed the open. Lovely stuff. And we do have one bet already here from where is it? Disappeared. Yeah. AMD will be below 100 before the end of the year. I mean, that's an easy bet, I'd say, because we aren't that far away from $100. I'd say, do you want to bet that AMD will be below or above $100 by the end of the year?
So yeah, that one will be easier, because I could definitely see before the end of the year, I could definitely see this with volatility. It's not impossible to see some of these prices again. It's definitely not.
We're not that. It's like just a 10% drop or something. So a better bet would be if we close at 100 or less. So the market did open. Maybe I should refresh, because this is okay. Now the market did open. Tesla is down another 2% or so. But yeah, I think it's like yesterday. I'd say it's like yesterday. Not much has changed right now. Don't want to check the 10-year yields are back at 4.5%. So that's not that great. But yeah, Europe was green today. Asia was green, other than the Nifty 50 that was red. And the US right now is red across the board for the markets, the stocks.
Neil, I don't know if you have TradingView, because these, I think, are updated. This might be like 15 minutes behind, but Tesla is green right now. It's up about 3%. Amazon is pretty much down about 0.5%. Microsoft is down about 0.5%. Yeah, so out of the Max 7s, I think maybe just the Tesla is up right now.
Surprising. Voila. Updated. Much better. Amateur hour. Okay, much better. So basically, Tesla is green. That's crazy. 3.2%. Tesla is green. The rest is flat-ish. We've got some red for Nvidia and Apple, but not much movements, I'd say. I feel like I wanted to touch on something. And by the way, thank you very much for becoming a member here. Really appreciate that.
And there were a few questions here, Neil, that I wanted to get into. First, Kosi Waddles, quantum computing just tanked. I'm not sure if someone said something during one of these massive meetings that's happening right now. So curious what's happening there. We did see kind of a lot of, I guess, bullish sentiments because Nvidia did announce a lot of quantum research partnerships and stuff like that during um, Computex. I like this question here, Neil, from Joseph. Neil and Jose, I'm feeling a little hesitant to deploy any additional funds into most of my positions due to the massive run up over the past month. Are there stocks you guys are still adding to? Um, Neil, I would say I'm actually feeling the same way right now. There's probably only a few stocks I'm feeling really comfortable at the moment. And it's also because maybe during the April crash, I did deploy a lot and I did kind of
Hmm.
really increase position. So it's like maybe right now is the time where I just chill a little bit. Normally, Neil, when I see stuff like when I feel like this, I still put money into my account, but I do more just purchasing ETFs, because I do believe ETFs have a safer way of going up and a little less hype behind them. And it also allows me to, this is sometimes seen as my cash position. When stocks go down dramatically, I tend to sell off my ETFs and use them, even though they might be down, my high growth stocks are going to be down a lot more. So I'd rather kind of take that money outside of my ETFs and kind of put them into those high growth stocks. And that's what I actually ended up doing a lot during the April. So there are two stocks that maybe I am really looking at right now, Neil. Is Google's one of them. I haven't added to it, but I've been talking about it too much. And the second one, Neil, is I'm thinking about it. I haven't really pulled the trigger. Marvell. Marvell is one that now with the recent partnership with Nvidia, I believe they're going to be able to get some market share in this ASIC space a little bit quicker than previously expected. Even though there are reports that maybe they lost Amazon as a customer, that still hasn't been confirmed. A lot of reports, and one of the reasons maybe the stock is down from 110 or 120 to like 60s. I think at 60s, I like it. I didn't like it at 120. I do like it at 60s right now. So Marvell is one that I'm still debating, but those are probably the two ones on the top of my mind right now. But it could change on a daily basis, Neil. How about you? And thoughts here on what Joseph had to say.
Yeah. So uh, two things. First of all, on the quantum computing stocks tanking, actually, on the contrary, D Wave is up 18%. Quantum computing is up 4.4%. Rigetti is up 1.8%. So no tanking here, or maybe he wanted to say the opposite. But first of all, I'm very impressed that these quantum computing stocks have held up so well over the last couple of months. Insane performance. Second of all, yeah, I agree with you. I think the only thing where I'd say I have no issues buying more and more is Google, is Google stock, to be honest. Because one, you're getting a high quality business at a very, very good price, and the risk is not that high. Now, I'm not saying that everything is overvalued, not at all. But like you said, we've been buying heavily since the start of April. So right now, there might not be any reason for us to continue to buy at these prices. I actually added just to the cash position. That's the move that I made right now. In case there are one of those days where we've seen overreaction, or maybe a week where we've seen overreaction, and then this will allow me to just buy buy more shares of a specific company. Now, that's not to say that I have issues buying companies that I already own, because a lot of them are still trading at, say, at attractive prices for the long term. But I'm in no rush anymore. We've had great opportunities at the start of April. Right now, no rush at all. The only thing I'm doing is just increasing the cash position. Um, that's about it, which makes me feel more comfortable. Your play is, of course, ETFs, which is fine. I increase my cash position because I do get 4% on my cash. So maybe that's one of the ways I could benefit from just having an increased cash position. So yeah, that's basically the move, my move.
Yeah, and I agree. I think you mentioned, Neil, there are some stocks we own. Like, for example, AMD still looks very attractive to me. I think AMD still has such a growth opportunity. But for me, AMD is already. And Joseph, I think this is also the important thing is it also depends about portfolio allocation and stuff like that. Where AMD is already a massive position, so that's why I didn't include AMD on my list. But it's one I really wouldn't. I'm not going to load the boat on it, but I still believe it's still undervalued compared to where it could be in the future. Still, I believe it's massive growth opportunity there.
Touching
So
on AMD, Josh had this question. I have over 100 shares now of AMD. I came from a long way. But Josh here says you mentioned AMD stock buyback. Their stock was in the toilet. I agree. Why did they still have $4 billion left from their previous buyback announcement? Shouldn't they have spent that? So they did spend it, but I rarely see a company spend $4 billion over 2 quarters, over a quarter on buyback. So they have a program. Now, of course, you as an investor, you would love it for them to just buy the most at the bottom. But as a publicly traded company, they have a plan to buy back X amount of shares each and every quarter. Now, I'd say with the increase of 6 billion, which now brings us to 10 billion, I'd say they'd be more comfortable aggressively buying if they feel like their stock is too undervalued. A bit like Uber. Remember, we talked about that Uber at the start of the year. They suddenly announced an accelerated share buyback program of $1.5 billion. I believe the shares are up 40% since. So very, very smart move from them. So for AMD right now, one, the fact that they increased it by 6 billion gives them more flexibility to buy more, and two, it shows confidence in their cash flow, right? You're not going to increase it by $6 billion if you're not going to be able to generate billions of dollars in free cash flow. That wouldn't make any sense. So yeah, hopefully they do accelerate the buybacks. There was also an announcement yesterday when it comes to the ZT system, right? The manufacturing side of it. So they reached an agreement with Sanmina Corp to acquire ZT Systems manufacturing business that's going to be $3 billion in cash and stock, inclusive of a contingent payment of up to $450 million. I believe previously the reports were around $4 billion. Now we're getting $3 billion in cash and stock, which, to be honest, I take it as a win.
And the other thing is, I mean, we've gotten a lot of great news from AMD. I mean, since we last been here. I mean, they do seem to get some nice wins with the UAE. They announced a kind of a 10 billion data center investment with Humane, I believe was the company.
Yep.
And Oracle. I'm pretty excited for the AI event coming in just a few weeks from now. I would love to see any announcements and updates on UAE and obviously their upcoming products. Semi Analysis actually recently did an article on AMD and how they're like really becoming a strong player with the MI400 and how it's becoming pretty exciting for their potential and also some of the advancements in software space. So that's pretty enjoying to read as a AMD investor.
Yeah, no, I agree. I really hope that the AMD AI event, and maybe we'll stream that eventually. I really hope that they send a good message to the market, right? Because the market right now still does not believe that AMD is a very, very valuable competitor to Nvidia. Let's be honest. But I really hope that in that event they show all the necessary things for the market to actually comprehend what AMD is trying to do. Maybe show off, look, these are the new customers, right? The big tech companies. This is the amount of commitments that we have for maybe you've already MI400, MI350, etc., to really, really show the market and maybe also the developer ecosystem, which is very important, with ROCm that, well, NVIDIA is a valuable option or alternative versus NVIDIA. Because why would you do an event like that, right? If it's not to show off.
Yeah. So pretty interesting. I'm super excited for that event. Let's see what other questions we have, Neo. Scott here, I want to take his question. Neo, can you talk a little bit about the replacement cycle of chips? How long before the large players start to buy the next gen of chips of NVIDIA, Ruben? Scott, it's all. I think we talked about it in the beginning. NVIDIA makes sure that all their players know that the next chip is coming. So all the big players are already prepared to purchase Rubin once it released. So once Rubin is released, they're going to be buying it. But right now, the next cycle, Scott, is the GB300 or the Blackwell Ultra. And Jensen mentions that it is expected to be in production by Q3 of this year. So that's when you expect to see new large players buy the GB300 or the Blackwell Ultra, and then Rubin is expected next year around late 2026. And again, you would expect all the large players to start buying them as well, as they already have preemptive amount of time to build up their data centers and to have those chips being waiting for them to come in. So I think Nvidia has worked really well to showcase their 5-year plan, so like that their customers know what chip is going to be released, and when they should buy them.
Agreed. Um, this is an interesting question. What are your top undervalued stock for this year, two each? So I guess the first one we can all agree on is obviously Google. We keep on talking about this.
Yeah,
The
I
second
agree.
one, yeah, the second one is I guess could be all over the place, right?
Yeah,
I could still
and Neil, just to
see,
make sure, this is talking about right now's prices, right? For
yeah.
right now's prices, yeah.
I mean, I could make the case any day of the week that PayPal is still undervalued, but then again, I'm a bag holder. Well, not really a bag holder because I am up on the position, but that position just doesn't move much. Um, because yeah, undervalued for me means that the price that I'm buying today will still make sense a year, 2 years, 3 years, 5 years from now, and I'm comfortable buying at these prices. So, the second, yeah, maybe I should still choose uh, PayPal. To be honest, I won't even say no to SoFi. Um, so yeah,
Yeah, for me, Neil, I Google definitely number one. I for me, my top one for this year. Second one is very hard. If we're looking at a long time frame, I do want to say, I might get some crap for this. AMD, I do believe this in the next 5 years, Neil, could easily be a $500 billion stock, and it's trading at less than 200 billion. Obviously, I think that, but I don't. It's not a guaranteed, so that's why everything is portfolio allocation. Um, there's the risk to reward basis, and things could go wrong. But I do believe that one has a high probability of at least 2xing in 5 years, and that's amazing returns. I mean, better than it takes the market on average at least 7+ years to do double. So if I can do it in a shorter time, I'm all for that. And 500 billion would be more than 2x. It would be 2.7. So I think those two in individual stocks would be mine that I can think of right now. But sometimes I forget some of the names, and I'm like, oh snap, I should have thought about that one instead. But those are the top two right now, Neil.
you know, I agree. And when you said that it's going to be a 2x in what was it, 2 years, 3 years, whatever, or maybe 2.7x. Um, some people will say that's not enough, right? Because they're used to the 2x happening in a couple of months. But if it happens in 2 years, that's not enough. Which
That's
is
too long, right? Yeah, I mean, like
yeah,
for Coreweave, right? I mean, 2x in just a few weeks. To me, that's crazy.
exactly.
That's crazy. I'm like, there's no way I can keep holding this for too long. So that's what I'm thinking about selling some. And there were a few questions about CoreWeave. Thoughts on CoreWeave? Nvidia heavily invested. Growth opportunity, Jamie. I do believe it's now sitting in extremely high values. I think eventually can meet these demands. I have a nice position on this one. I will never sell the whole position, but for me, with my cost basis, selling here wouldn't be the worst thing to do, as I do believe this is going to be very volatile, and prices, you get opportunities. So I wouldn't add on to Nebius right to CoreWeave right now, Neo. But I'm not selling everything out the books just yet.
I mean, you could. I mean, if you're up over 100% in a matter of weeks, you could take your initial investment off the table and just let the rest ride and be done with it.
Yeah, that's what I'm actually thinking about, Neil. So I'll probably make a decision later today on it. But even if, like you said, Hunter, I got all my money back, and I still have a healthy position on this company, and I do believe there's growth opportunities here, but I wouldn't be adding at these because I already have a position, and sometimes that creates a form of wall for me. If I already have a position, there's no point of me adding at these levels.
Yeah, no, fair enough. United Health, yeah, United Health is up 23%, 22% from the bottom of last week. I don't know if you've been following this story, but this is actually a crazy. And we actually talked about this a bit during the full live stream. If over 50% haircut, so you got 100% increase in your Coreweave in the last month, while United Health got a 50% haircut in their valuation. But yeah, it's a crazy story. It's a company that generates over $400 billion in revenue annually. Um, but yeah, crazy, and congrats to those that did actually buy the bottom. Um, but yeah, that's crazy. And Nebius was up over 5%, but as you can see on the screen right now, the more we talk, the more red we're seeing. So welcome back to the show.
Someone said it, and there we go, Joseph. Most of my positions are read on the open. Thank you, guys. No problem, Joseph. No problem at all. We got to bring
That's why
back.
we're here.
We got to bring back this hype to reality.
Exactly. Again, the lower things go, the more stocks, the more shares we can buy. So you're all welcome. Um, let's see. Yeah, what's your outlook? You just talked about Marvell actually, but the next 2 to 5 years, because this was also a stock that got a 50% haircut, I think.
Yeah, yeah, definitely a little bit more than that. I mean, Marvell to me, Neil, is one of those. I would put it in more risky, a riskier investment than AMD. I think this one has more risk, but obviously more reward potential. The opportunity here is one, the data center networking solutions. Can they continue to grow in the various markets that they have with the communication space? I think the answer is yes. But then the AI aspect is another one. Can they win ASIC solutions, companies to build with them? If the answer is yes, this could be a really good investment. Unfortunately, Neil, there are some reports that they might have lost one of their big customers, Amazon, to it. No confirmation yet. And in the last earnings call, Neil, company actually mentioned that they still had at least a few-year contract with them for a few of their generations. So it's not like it would be a revenue hitter anytime soon, because it takes time to develop the chips and then mass produce it. So now they're in the mass production of the chips that they worked with. So it gives them ample amount of time to find new customers. Now with the NVLink Fusion, I think it increases that chance of getting even more customers as well. So my outlook is this is a growth play, in my opinion. It's with growth plays, you come with risk. I would never make it a big position because it's going to be very volatile. And I believe my chances of being right are not as high as maybe some of the other places that I know. But it is a company that I'm looking to add more into, to increase into my portfolio of growth style, but make it a rightful allocation because of the risk that it comes with.
Yeah, that makes sense. I mean, I guess Amazon is not part of those big clients that Broadcom has won over the last couple of quarters. So yeah, makes sense.
Let's see. Any other questions we have here? Have you heard? I saw that they had a position in it. We Ride. Is that a stock that you follow, Neo,
No,
or anything?
it's one of those autonomous vehicle plays, no?
Yeah. I mean, I've heard of the company, and maybe I've seen some of their apps. I'm by the naming, it looks like it's a Chinese base because right, WeChat and all those other things that
Yeah.
every company has that. So We Ride seems to be. I'm not a huge fan of investing right now in Chinese companies. So I have plenty of plays in the U.S. market. So no thoughts there, and not for any, I would say, true bearish reasons. It's just I don't want to get exposure into another market I can't follow as closely as here in the U.S.
Fair enough. I have Alibaba performing quite well, but it's interesting that they have WeRide. Nebius has the AV Ride segment in their business. So yeah, I mean they did also have Serve Robotics, I think last year, Nvidia. So they do like to have that exposure towards the robotics and the autonomous vehicle side of things. Would you look at your background? Huh.
The back.
Wait, let's see what we've got here. A bit of a
too dark.
downgrade. A bit of a downgrade, to be honest.
I gotta make some changes later on.
I'm sure I missed a question before, but yeah, Micron is one that I'm waiting for the report, but they just report uh, very late. I think they just report in June or something like that.
Um, yeah, they report in June already. I don't.
I think they report in June, yeah, because
Yeah,
they
they're one of
reported
those
in
that
March. Yeah, they always
it
report late.
depends. Yeah, it depends. Either you say they report late or they report super early. But yeah, I mean, Micron is definitely still, in my opinion, seeing nice growth, especially with ASIC solutions, right? I mean, you're seeing more AI. I mean, the UAE announcement is big for memory. You're going to need a lot more memory as you're building more data centers globally. So I think there's still a nice bullish scenario here for Micron and the memory space.
Yeah, I do want to go back to the undervalued question that we had, because it's not companies that I own, but companies that I did touch on yesterday, and that's Novo Nordisk and Evolution AB, which we have one question here. I reinvested my dividends from Evolution Insane Company on sale. If growth picks up in Asia, we will rebound hard. I mean, yeah, it's both of those companies, Novo Nordisk and Evolution AB, have, I mean, their stock have come down closer to 50% from the highs, and yet the company does very well, generates billions of dollars in revenue, free cash flow positive. For Evolution, it is also self-inflicted damage. So growth slowing down because they move from unregulated markets to regulated markets. But it does make sense for the long-term future because the barrier of entries are just getting higher and higher now in regulated markets. Some cyber attacks, of course, in Asian markets, FX headwinds. So it's a perfect storm that ruined their momentum, but the core business is still doing well with Novo Nordisk. Again, very good company, CEO resigning, leaving, whatever you want to call it, a bit like Pat Gelsinger. Um, they did say a couple of times that it's because of the share price decline in their letter, but it's definitely because, well, they're losing market share to Eli Lilly, not so much to the compounders, but to Eli Lilly. They've had the majority of the market share for a long time. They're losing that. They are not really, they haven't been focused as much as they should have in the American market. And I do think that the next CEO is probably going to be an American one because, well, it's just a huge growth opportunity for them. And both of those companies are trading at very attractive prices. Now, the big question is going to be, so why aren't you buying these companies? Well, again, I am not just going to buy with a dollar or two for the sake of buying. I don't have unlimited amount of cash, so I don't need to open new positions. But for those that are looking at opportunities, I'd suggest to look into those companies because those are good companies still trading at very attractive prices.
Thank you for those, Neil. I like this one from Mr. Herb 36. Is top ETF a good to add to the list? Um, it's 20 of it seems like Neil, it's like 20 of the big companies, and I can't see how they have their whole. At first I thought it was based on market cap, because about 45% of their exposure is Microsoft, Nvidia, and Apple. And I think those are the three biggest players right now. But then Amazon is 6%, Tesla is 5%, Broadcom is 4%, Meta is 4%. Google is only like 1.3%. I already don't like it for that reason. I mean, it's an interesting explore how top provides investors with exposure to the 20 largest U.S. companies and can help power a portfolio with. It's not a bad. It doesn't look bad. I don't know if you have it, Neil, where you can pull it up really quick. I wanted to look maybe at its overall expense ratio, 0.2%. Not the craziest thing. If you go to fees up there, 0.2%, and then holdings, it's let's say I wanted to get exposure to big tech. This might be a great way. I really do like the Mag 7s a lot more. I think someone here or you, Neil, talked about it. The Max ETF. That is one of the ETFs that I bought a lot during kind of the crash because I felt like most of Mag 7 was inexpensive. And I do believe the Mag market is gonna destroy the space right now. All these players, minus Apple,
It's
is
this one.
developing some form of AI solution. Yeah, I think it's this one.
It's also quite heavy Tesla here. Huh?
Well, I think right now it's mainly because of the recent allocation, and Tesla has been the one that's jumped up the most in since the recent allocations. I think Tesla's been the biggest winner in forms of returns in the past month or so. So sometimes that kind of secures it a little bit. In theory, it's supposed to be more of like a equally amongst each of the Max 7.
I here as well. I don't know why. I mean, Alphabet gets
Yeah.
disrespected way too
I
much.
guess,
Way
yeah.
too much.
There should be a Mac 3. I would love the Mac 3. Maybe like a Google. I don't know. Maybe a Mac 6. Just get Apple out of the list, and I'll be happy with the Mac 6 ETF.
Yeah, no, I agree. I agree. Um, let's see what the market is doing at the moment. Not that great,
Yeah.
I'd say. Not that great,
Yeah.
but
And
at
Neil,
least that this.
I think we only got 1 minute left before I need to jet out. So if any final questions, if not, I'll
We
see
will be
when.
back.
Yeah, we will be back. We got to talk to see when we come back this week. Um, but I definitely do think we can pull up another one this week for sure.
Yeah, I mean, the market open is of course a highly competitive time slot, but I think one where maybe the audience deserves some new
Yeah.
options.
Yeah. Yeah, I think Thursday for sure, Neil. Thursday, I'm looking at my calendar. If you can Thursday, I can Thursday too. But we can
Thursday,
talk about it
yeah,
off stream.
yeah. I don't think I have a live show with the Fool or something. So, last couple of things here. If Tesla reaches 400, I will short it. I mean, to be honest, if Tesla reaches 400 right now, I'd probably take some profits as well. I wouldn't short it. I'd just take profits.
Yeah, and that's the difference. Yeah, I wouldn't mind ever taking profits. I don't know if I would ever be a shorter.
Yeah. Novo Nordisk thoughts. I just talked about this 5 minutes ago, and my yesterday's video on the channel was about Novo Nordisk. So I highly suggest you go watch that. And if the stock is up today, that's thanks to me. I am market manipulator. Only when it goes up. Only when it goes up.
All right, guys. Thank you. Appreciate it. And we'll see you next time. Hopefully Thursday or Wednesday. We'll
Hopefully
see.
it's okay.
Yeah.
Bye bye.